Hey everyone, welcome back to Tesla Daily. Today's April 7th, 2026, and we've got some exciting updates to cover. First up, let's talk about Tesla's comeback in Europe. It's been a journey, but we're seeing some positive signs. Then, we'll dive into the latest on the full self-driving software. The 14.3 update has just been released, and it's packed with improvements that we can't wait to explore. Now, we also have some news about Tesla's ambitions in AI. The company is expanding its chip development, which could really elevate our driving experience. Speaking of ambitious projects, Intel has joined forces with Musk on the Terafab initiative. This partnership could reshape how we think about manufacturing. In other news, the NHTSA has officially closed its investigation into Tesla. That's a relief for many of us who have been following this closely. So there's a lot happening, and while we face some challenges, the future looks bright. Let's keep our eyes on these developments and see how they unfold. Thanks for tuning in. Tesla is making headlines with a remarkable 315% year-over-year surge in vehicle registrations in Germany for March 2026, totaling 9,252 units. This impressive performance marks the company's best March since December 2022, and is part of a broader recovery across Europe after a challenging 2025. In fact, March alone accounted for approximately 72% of Tesla's total Q1 registrations in Germany, which reached 12,829 units, a 160% increase compared to the same period last year. The surge in registrations has allowed Tesla to capture a 3.1% share of all new vehicle registrations in Germany, and a commanding 13.1% of the battery electric vehicle (BEV) segment. This growth is indicative of a larger trend, as Tesla is also experiencing significant gains in other European markets. For instance, registrations in France jumped 203% to 9,569 vehicles, while the UK saw a 20% increase to 8,599 units. This resurgence can be attributed to strategic pricing adjustments, particularly for the Model Y RWD, which has made Tesla vehicles more accessible to budget-conscious buyers. As noted, March represented a statement quarter, reflecting not just a recovery, but a potential shift in consumer sentiment towards Tesla, following previous challenges related to brand perception. In South Korea, Tesla's sales skyrocketed by 330% in March, driven by aggressive price cuts, allowing the company to capture 69% of the imported EV market. This demonstrates that affordability remains a key factor in driving demand, a sentiment echoed across various markets. However, while these numbers are promising, they also highlight the volatility of the EV market, which remains highly sensitive to pricing strategies. As we look forward, the challenge for Tesla will be to maintain this momentum without sacrificing profit margins, especially as competition intensifies in the EV space. Overall, Tesla's recent performance in Europe suggests a positive trajectory, but the sustainability of this recovery will depend on continued innovation and strategic pricing in a rapidly evolving market landscape. Next up, another key development. Tesla's recent quarterly performance has raised alarms among investors, as the company reported vehicle deliveries that fell short of expectations. In Q1 2026, Tesla delivered 358,023 vehicles, missing Wall Street's forecast of approximately 365,000 by about 7,600 units. More concerning is the fact that Tesla produced 408,386 vehicles during the same period, leading to an inventory surplus of over 50,000 unsold cars. This situation suggests a potential demand issue rather than a simple logistics problem. JP Morgan has expressed a cautious stance on Tesla's stock, revising its earnings per share estimate downward and highlighting risks associated with the company's expansion into lower price segments. The firm noted Tesla's strengths, including its business model and technology, are outweighed by above-average execution risk, and now let's shift to the next story. In a surprising twist, Toyota has emerged as Tesla's biggest competitor in the electric vehicle (EV) market, with its BZ crossover vehicles reporting a staggering 79% increase in sales from January to March 2026, totaling 10,029 units sold. This surge comes at a time when many other automakers, including Ford and Chevrolet, have reported significant declines in EV sales, with Ford's Mustang Mach-E sales plummeting by 60% to just 4,600 units. As the market shifts, the demand for affordable EVs is becoming increasingly clear, and Toyota's pricing strategy has positioned it well against Tesla's premium offerings. The BZ's price reduction to $36,350 has made it more accessible, capturing the attention of budget-conscious consumers. A Toyota spokesperson noted, "We adjust our..." Here's the next update you should know. Tesla has officially begun rolling out its full self-driving supervised V14.3 update, a significant enhancement that promises to elevate the driving experience for Tesla owners equipped with HW4 vehicles. This update, identified as software version 2026.2.9.6, introduces a complete overhaul of Tesla's AI architecture, which CEO Elon Musk has previously described as the last big piece of the self-driving puzzle. One of the most notable improvements is the complete rewrite of the AI compiler and runtime using MLIR, multi-level intermediate representation, resulting in a remarkable 20% increase in reaction time. This enhancement is crucial for real-world safety, allowing Tesla vehicles to process complex environments and respond to hazards more swiftly than ever before. The update also includes upgraded reinforcement learning capabilities, which enhance the neural network's performance across a wider range of driving scenarios. This means that the vehicle is now better equipped to handle challenging situations, such as complex intersections with multiple traffic lights, low visibility conditions, and interactions with emergency vehicles and school buses. Additionally, the new vision encoder strengthens the vehicle's understanding of 3D geometry and improves its ability to recognize traffic signs, making it more adept at navigating real-world challenges. The system can now better handle unusual objects encroaching into the driving path and has improved its response to small animals. Tesla has also made strides in parking behavior with the introduction of a map-based P-icon to indicate parking locations and enhanced decisiveness in selecting and maneuvering into parking spots. These improvements lay the groundwork for future features, such as pothole avoidance and enhanced driver monitoring capabilities. As we look ahead, the rollout of FSD V14.3 is expected to be gradual, with early testers already experiencing the benefits. This update not only marks a significant step forward for Tesla's self-driving ambitions, but also reinforces our commitment to leveraging AI technology to improve safety and driving efficiency. In summary, FSD V14.3 represents a critical advancement in Tesla's journey toward full autonomy, showcasing our dedication to innovation and safety on the roads. Next up, another key development. In a significant development for Tesla, we have partnered with Intel to launch the ambitious Terafab Project, a $20 billion initiative aimed at revolutionizing semiconductor manufacturing. This collaboration, which also includes SpaceX and xAI, is designed to produce an unprecedented 1 terawatt of compute power annually, crucial for our future AI and robotics endeavors. Intel's involvement is particularly noteworthy, as it brings expertise in designing and fabricating ultra-high-performance chips, a capability that has become essential for our full self-driving FSD technology and the Optimus humanoid robot. The Terafab will be located near Giga Texas in Austin, Texas, and aims to streamline chip production processes significantly. Unlike traditional semiconductor factories, which often specialize in one aspect of chip production, Terafab will integrate logic, memory, and advanced packaging all under one roof. This innovative approach is expected to reduce the production cycle to just 9 months, a remarkable improvement over the annual timelines typical of competitors like NVIDIA and AMD. Elon Musk emphasized the necessity of this project during a recent shareholder meeting, stating, "If we were to extrapolate the best-case scenario for chip production from our suppliers, it still wouldn't be enough." This urgency underscores our commitment to ensuring that we never face supply bottlenecks again, especially as we scale our AI and robotics ambitions. Intel CEO Lip-Bu Tan expressed enthusiasm about the partnership, noting, "Elon has a proven track record of reimagining entire industries. This is exactly what is needed in semiconductor manufacturing today." This collaboration not only positions Tesla at the forefront of AI technology, but also represents a significant step for Intel, which has been striving to regain its footing in the competitive chip market. As we move forward, the Terafab project could redefine the landscape of semiconductor manufacturing, potentially leading to faster advancements in AI and robotics. However, analysts have cautioned that achieving the project's ambitious goals may take time, with some estimating that production might not commence until mid-2028. Nevertheless, this partnership marks a pivotal moment in our journey towards becoming a leader in both automotive and AI technologies. Here's the next update you should know. In a significant development for the tech and automotive sectors, we are witnessing a pivotal moment as Intel has officially joined Elon Musk's ambitious Terafab Project, a semiconductor manufacturing initiative projected to cost between $20 billion and $25 billion. This collaboration aims to produce a staggering 1 terawatt of computing power annually, primarily to support advancements in artificial intelligence and robotics, including Tesla's self-driving cars and humanoid robots. Musk's Terafab, located in Austin, Texas, is designed to integrate chip design, fabrication, and packaging in a single facility, a novel approach that could revolutionize semiconductor manufacturing. Intel's involvement is crucial, as the company will leverage its expertise to help accelerate the project's output targets. Intel CEO Lip-Bu Tan stated, "Terafab represents a step change in how silicon logic, memory, and packaging will get built in the future," highlighting the project's potential to reshape the industry. Despite the excitement surrounding the Terafab, it's important to note that Intel has faced challenges in its chip production efforts, with delays in its own fabrication plants. The first of these facilities is now expected to begin operations in 2031, a significant setback from earlier timelines. However, the partnership with Musk could provide Intel with the much-needed boost to regain its footing in the competitive semiconductor landscape dominated by companies like TSMC. Musk's vision for Terafab is ambitious, aiming to meet the growing demand for AI computing power. He has previously expressed concerns about the limitations of current chip supply, stating even optimistic projections from suppliers will fall short of demand. This partnership with Intel not only strengthens the Terafab initiative, but also aligns with broader efforts to increase domestic chip manufacturing capabilities in the U.S. amid global supply chain challenges. As we look to the future, the success of the Terafab project remains uncertain, given the complexities of semiconductor manufacturing and the historical challenges Musk's ventures have faced. However, with Intel's backing, the project stands a better chance of achieving its lofty goals, potentially transforming the landscape of AI and robotics in the coming years. Next up, another key development. We have received significant news regarding Tesla's Smart Summon feature, as the National Highway Traffic Safety Administration, NHTSA, has officially closed its investigation into the remote parking technology. This probe, which began in January 2025, scrutinized 2.6 million vehicles equipped with the Smart Summon and Actually Smart Summon features, after reports of 159 minor incidents, primarily involving low-speed collisions with parking obstacles. The NHTSA concluded that these incidents represented less than 1% of all Smart Summon sessions, which reassured us that the feature is generally safe. Importantly, there were no injuries or fatalities linked to these incidents, and the agency noted that the crashes typically involved minor property damage. As a result, the NHTSA decided against issuing a recall, allowing Tesla to continue selling vehicles with this feature. Due to low incident occurrence and low incident severity, this preliminary evaluation is closed, stated the NHTSA in its report. However, they also cautioned that the closure does not imply that a safety-related defect does not exist, leaving the door open for future scrutiny. This development is a relief for Tesla, especially as it continues to navigate a complex regulatory landscape. The company is currently under investigation for its full self-driving FSD system, which has raised concerns about performance in reduced visibility conditions. This investigation covers approximately 3.2 million vehicles and has been escalated to an engineering analysis, indicating that regulators are taking these issues seriously. Moreover, Tesla's commitment to a camera-only approach for its autonomous systems has drawn criticism and could lead to further regulatory challenges. As we look ahead, The closure of the Smart Summon probe may provide a temporary reprieve, but the ongoing investigations into FSD and other aspects of Tesla's technology highlight the need for continued vigilance and innovation. In summary, while we celebrate the closure of the Smart Summon investigation, we recognize that Tesla's journey is far from over. The company must continue to enhance its technology and address regulatory concerns to maintain consumer trust and ensure long-term success in the evolving automotive landscape. Next up, another key development. In a recent town hall meeting in Lancaster, Pennsylvania, Elon Musk, CEO of Tesla and SpaceX, stirred the pot by questioning the effectiveness of U.S. foreign spending. His remarks, made in October 2024, resonate in a time when government spending and foreign aid are hot topics in the national conversation. Musk stated, "We send a lot of money to various countries, but I'm like, does it do any good?" This straightforward inquiry challenges the status quo and suggests a reevaluation of how U.S. funds are allocated abroad. Musk's comments reflect a broader sentiment among many Americans who are increasingly scrutinizing government expenditures. He advocates for a more restrained approach, reminiscent of the Monroe Doctrine, suggesting that the U.S. should let next up another key development. In a striking assessment, J.P. Morgan analyst Ryan Brinkman has issued a sell rating on Tesla, predicting a staggering 60% decline in its stock price, currently at $361, potentially dropping to just $145. This forecast comes on the heels of disappointing Q1 delivery numbers, where Tesla managed to deliver only 358,000 vehicles, falling short of Wall Street expectations and marking the second worst quarter since 2022. Brinkman's report highlights a growing disconnect between Tesla's inflated market valuation, approximately $1.3 trillion, and its actual financial performance. He notes that the company's price-to-earnings ratio exceeds 300, suggesting investors are betting on future growth that may not materialize. With expectations for Tesla performance having collapsed for all financial and performance metrics across all time, next up, another key development. In recent days, we've witnessed a series of alarming incidents involving Tesla vehicles that have raised significant safety concerns. The most tragic of these occurred in Grass Valley, California, where a high-speed crash claimed the life of a 37-year-old driver and left a female passenger in critical condition. The California Highway Patrol reported that the 2022 Tesla Model S was traveling too fast for a curve, leading to a collision with a tree that resulted in the vehicle catching fire. Firefighters struggled to extinguish the flames, and despite both occupants wearing seatbelts, the driver was pronounced dead at the scene, while the passenger was airlifted for emergency surgery. In a separate incident, a Tesla driver was arrested for DUI after, next up, another key development. Elon Musk is currently embroiled in a significant legal battle against OpenAI, the artificial intelligence company he co-founded in 2015. This lawsuit, which seeks damages ranging from $79 billion to $134 billion, centers on Musk's claims that OpenAI has strayed from its original non-profit mission by transitioning to a for-profit model. The trial is set to begin this month, and the stakes are high, not just for Musk, but for the broader tech landscape. OpenAI has countered Musk's accusations, alleging that his behavior has been improper and anti-competitive. They have called for investigations by the Attorneys General of California and Delaware, claiming Musk has attempted to manipulate the nonprofit for personal gain. OpenAI's chief strategy officer, Jason Kwan, stated, "Musk's." And that wraps up our update for today. Thank you for joining us for Tesla Daily Insights. We appreciate your time and interest. We'll catch up again in the next update. Until then, take care.